Yo. Oh, dunked on, kid. Holy fuck. Oh, I was just chicken. Bro, honestly, bro, this is so unfair, bro. Like, how do we lose that, bro? Because you aren't using fair value gaps, bro. That's why you fucking lost that shit. Let's get it, baby. Fair value gaps. Let's actually close that before something bad happens. Fair value. The biggest, most luxurious BBC freaking confluence there is to exist, bro. The fair value GAT. Say it with me. Fair value gap. Fair value gap. You might be asking, what is this fair value gap that you speak of? Now, it is the bestest confluence you'll ever see. Why do we gap up this far? Holy crap. Brother, what is going on? How did this happen? Yo, bro, that's suspicious. I don't know what's going on there. Anyways, like I was saying, fair value gap. What is a fair value gap? It is the most simple thing that you'll ever see in your whole entire gosh dang life, okay? It's quite literally just, yo, give me a sec. Okay, I'm back. I had to raise the rent on a single mother. Anyways, fair value gaps, what are they? So let's just say, okay, let's Tuesday, May 24th. Boom, baby. Let's go back in time. Where is our replay trading? Give me the replay now. I demand it. Okay. Ooh, this is, what is this showing that in the background, bro? It's so ugly, bro. That's so ugly, bro. Where's my, bro? Watermark 0. Get that out of here. Market open. Okay. Wow, market open. Let's make it market open. Wow. Wow, guys. Wow. Wow. Boom. Okay, what is this right here? Wow, fair value gap. Fair value gap. What is a fair value gap? It is the most simple thing ever. Boom. Let me change that real quick. Boom. Another one right here. Boom. Now, these ones got inverse. We'll talk about them in the next video. So this is what a fair value gap is. To keep things very simple, I gotta remove this line too, because you don't need that. All it requires is that you need 3 candlesticks, okay? So you got 1, 2, 3. It doesn't matter which direction they go in. All that matters is that, here's actually a very good example. All that matters is that you have 3 consecutive candlesticks, and you only need a couple of requirements. So this, ladies and gentlemen, is called the wick, okay? This black part at the bottom. This is called the body, the part in the middle. What you need is here, requirements for fair value gap. Requirements. Requirement number 1. You need 3 candlesticks. Wow, guys, do we have 3 candlesticks right here in front of us? Let's actually select this bar, make it easier for everyone. Perfect. Do we have 3 candlesticks? We do. We have 1, 2, 3. Wow. Woo! Got 3 candlesticks, baby. Requirement number 2. You need first candlestick to not have to, you first candlestick bottom wick not overlap with third candlestick top wick. That's it. That's literally, where did my text go? There we go. So we have the bottom wick of the first candlestick right here, okay? This is our bottom wick. Does it overlap with the top wick of the third candlestick? So keep in mind that the second candle is irrelevant here. We just need it to exist. We don't care how big it is. We don't care what the wick look like. It doesn't matter. All that matters is that we have quite literally a gap. So right here, we don't have a fair value gap because the wicks overlap. If you were to take this wick the bottom of this wick right here and then say, does this overlap with the top wick? Yeah, in fact, it actually overlaps with the body. It doesn't work. Well, this one right here, if you were to take the bottom wick of the first one and then the top wick of the last one, does it overlap? No, they don't overlap, meaning that's a valid fair value gap. Wow, was it that hard? No. So that would be a bearish fair value gap because the candles are going down. I remember I said earlier that the direction doesn't matter. Well, it matters if actually it matters where the third candle closes. So if the third candle is like down, like see how this is up and this is down, that's the bearish fair value gap. I'll explain what that is in a second. So let's talk about bullish fair value gap. It's quite literally the opposite. So this is for bearish, okay? So that's bearish. So down, if you guys don't know, down. Oops. And then this is bullish. How do I don't think there's bullish up. I was kind of write it. So for the bullish one, it's quite literally just the opposite. First candle top wick can not overlap with third candle bottom wick. Boom, baby. Was it that hard? No, it wasn't. Okay, let's actually make this a little bit smaller. It's a little bit too big. There we go. So right here, we have our 1, 2, 3 candles, and we have the top wick of the first candlestick. Mark it out. Boom. Does it overlap with the bottom of the third candlestick? No, it doesn't. That makes it a fair value gap. I personally mark out my fair value gaps with boxes. You can do it with lines, but if you have too many lines on the screen, it does get confusing. So I like to take the box, use the control to use the magnet, and then just, there we go. And what I specifically do with my boxes, I extend them right so I don't have to manually extend them, but that's personal preference, like I said. So what do fair value gaps do? See how price comes down into the fair value gap and it goes back up because price only wants to target two things: liquidity and imbalances, to fill those imbalances. So once price has come up here and we have this gigantic 5-minute fair value gap, price is like, okay, we need to go down to keep going back up. What do we need to do? Go fill that imbalance. Where is the imbalance? Fair value gap. One of the most powerful confluences for a correction of an imbalance there is to exist. Okay, so price comes up, down, keeps going up. Okay, I'll show you guys some pretty good examples. Okay, and obviously a higher time frame holds higher power. So let's go to the 50-minute real quick. Boom, wow, this is a really good example. See this 50-minute fair value gap? See how price taps into it and goes up? Gets a reaction out of it, right? Price goes down, reacts out. Obviously keeps going down, but that's just because it corrects itself, you know? So let's just say we were going to the lower time frame. And let's just say we were to take a trade for whatever reason. Let's say we get this liquidity sweep right here, you know, this 1-minute liquidity right here. And then we have this fair value gap. We have a bullish reaction out of it. And then we have like an inverse fair value gap, this inverse fair value gap right here. We'll get into that. Well, that is in the next video. Take a trade, boom, set the stops below the, below the fair value gap, target the next imbalance, which is maybe the CE. So CE means consequent encroachment. If I ever say CE, it just means the 50% mark. So for example, if I were to take this fair value gap, mark it out, the CE is like the middle line, which is like most likely where price is going to reverse. Boom, target it, boom, trade taken. So I know this is a little bit complicated, but it's quite literally, here, I'm going to break it down for you guys actually. I'll make it so simple. You guys are going to love this. Okay. Let me open my object tree. Okay, perfect. So the first thing that we have is price going in a downtrend. So we are going to be looking for longs, which you probably shouldn't. This is just an example. We want to be looking for in between two corrections. So right now we're in the 1 minute and we have this, what is it, 15-minute fair value gap marked out, right? So price is likely to trend into this 15-minute fair value gap and then go back up a little bit to keep going back down because that's how it corrects itself, right? That's the first confluence of this trade. It's a pretty bad trade, but it's just an example. Then we go into a lower time frame where we click on the one. So this is like the 50-minute, right? 50-minute. Boom, perfect. Sorry, it's a 5-minute actually. No, it's 15-minute. I just didn't see it correctly. Yeah, 15-minute. Then we go to the 5-minute. Nothing really on the 5-minute because this 5-minute fair value gap right here from here to here, but it's already in the 15 minutes, so it doesn't matter. Then we go to the 1-minute, where we will have our entry model, right? We have this inverse fair value gap, like I said, I'll talk about in the next video. And then once we see a bullish reaction out of it, because we want bullish reaction out of this higher time frame fair value gap and this lower time frame inverse fair value gap. It's a little bit confusing, but just bear with me. This is just an example, okay? You guys can come back to this video later. Boom. Trade. That's just a really complicated example of how fair value gaps work, but I'll keep it simple for you guys. So right here, another perfect example, 1-minute fair value gap. Do these wicks overlap? No, they don't. So I'm going to take my box tool, drag it out, and we see price. Yeah, actually, let's do this. We see price trend up to the fair value gap, but then it closes bearish. Why? Because it goes higher to continue going lower, and it keeps going down. Wow, it's not crazy, guys. And then it went up for whatever reason. But yeah, that's basically what our fair value gap is. What I want you guys to see right here, how price went down, corrected itself here. You know what? I'll actually break this down for you really nice. You guys will like this right here. We'll just stay in this one time frame for now. So this fair value gap right here. So as you can see here, here's another good example. We have two fair value gaps. Okay. Now you might be asking, how do I know which one I need to use if you have two fair value gaps back to back, right? What you guys actually want to do here is combine them. Okay. Boom. So we have 1, 2, 3, 4 candles. But it's not about having 4 candles. It's just about the fact that we have two fair value gaps and we just simply combine them. Boom. Whatever. So we have price continuing going down, and I'm like, okay, I'm going to wait for price to come back up to this fair value gap. This one's right here is a really small fair value gap. So it holds less power because not only is it smaller, but we're on the 1 minute. And this is like technically 2 1 minutes back to back. So it holds higher power. So we want price to trend up. See, goes up, taps the CE, aka consequent encroachment, and then keeps going down. And then right here, wow, what happens? I should probably mark these out as we go. So right here, we have another fair value gap, right? This low, sorry, not this low, this high of the candle wick and this low of the third candle wick, they don't overlap. So that's another fair value gap. So I want to see price come here, tap into this range, and then tap into this range to go up. You get what I mean here? It's a trend, right? And this is just using fair value gaps. So price comes up, taps the CE, and then price comes back down to tap into this fair value gap. But it barely tapped into it. So I do want to see it reach further. It doesn't though. Whatever. And here's another fair value gap right here. I'll delete the ones that have already been ran through because once it gets run through, it's like invalidated. See, boom, right here, tapped up into this price range of the fair value gap and then kept going down. Wow. And then boom, boom, boom. Here's another fair value gap. Let's see if price trends into here. It's not always going to go to it, but it obviously depends where like your bias is and where your next draw on liquidity is. It doesn't. So then we go to the higher time frame. See if you have, see on the high time frame, it doesn't slow jack. Therefore, it's not that important. It's just like a 1 minute fair value gap versus like there's no fair value gaps in the high time frame, right? That's essentially what a fair value gap is. It's quite literally the most simple thing ever. You got to make sure that you have 3 candlesticks with the overlapping wicks of the first and the third one, but not overlapping. Sorry, make sure they're not overlapping. And you just draw a box in between them. It's literally the most simple way I can put it. And what you want price to do is come up and balance itself out. So I want to see price on this 1 minute time frame at least, because we're only looking at the 1 minute. We aren't even looking at all the other time frames. I want to see it come up, correct itself, and then keep going down, because it looks like we're in a downtrend because we had broke structure to the downside. Is price going to do that? It comes up and then goes back down. Wow, just as I had expected, right? That's all a fair value gap is price 1 and 2 go back to its unfilled imbalance to fill it. And how fair value gaps are formed are just intense volume, is formed by intense volume. You see how those aggressive candles to the downside form this gigantic imbalance? Is because there are a lot of sellers. So if there are a lot of sellers, what does that mean? That means price is going to want to come back up with buyers to correct itself to keep going down, since we're in a downtrend. But while we're going in a downtrend, we want to, like, I can draw this out really nice for you guys. Let's just say this will be like most optimal. Oops, this will be like most optimal. Let's just say we have like a fair value gap here, right? Price comes up, corrects itself, keeps going down. And then what do we have down here? Another fair value gap that gets formed from an aggressive, like, see how it comes back up, corrects it, keeps going down, right? And then let's just say that price no longer wants to keep going down for whatever reason. Like, let's say we swept a prominent low, took some liquidity out. So let's say this is liquidity, this line, the liquidity sweep. We swept liquidity and then we formed a fair value gap here, but price decides to obviously because it's a bullish fair value gap, right? Because it's going up, right? And wants to go up. And we broke structure. Like, that's an example right there of how to use these fair value gaps in what's the word I'm looking for? In hand with the other confluences. Anyways, what I want you guys to do is go and look for these imbalances and search for the ones that work. Okay, go find some fair value gaps, but don't try to find every single one. You want to find high quality fair value gaps, and how you find those is simply just market experience, obviously doing this for a long time, using the higher time frame because the higher time frame holds more power, as well as identifying the price action, the market structure that we're currently in. So as you can see, let me kind of like purge this. Actually, I don't want to purge. I forget it. Let's just say like we have this like chop session, right? We have price going like hella, like it's not going in a direction. This whole entire, how long is this? Like an hour. This whole entire thing right here is like an hour of price just ranging, right? It's just going up and down, up and down, up and down, instead of like following like a clear direction like it is here, right? So you wouldn't be wanted to take a fair value, because look at this fair value gap, right? This 1 minute fair value gap. I'm actually going to remove the drag right, just so you guys can see it a little bit better, right? Like, even though it worked, I wouldn't want to trade this because I would be targeting like internal liquidity or whatever. It's bad price action. You don't want to be taking these fair value gaps in bad price action, right? And I have videos on market structure and price action and what makes it good and bad. Make sure you study those. But yeah, that's basically what a fair value gap is. It's one of the most important trading confluences you can have, and it works like an absolute charm. So that'll be all for now. And yeah, guys. So I've been told that I need people to review. If you listen, bro, if you like what you've been seeing here and you want to support me, because honestly, this is the best way that we're able to do that, please go to the WAP. Go to the WAP, please. Click on the 3 dots and then review. Where's review? I don't know. Where's review? It says review up here somewhere. Yeah, I don't, bro. Listen, where's my Discord? Discord. Boom, baby. Over here, reviews, feedback. So you go up here and then you press review and you leave a review. You guys should leave a review if you guys like what you've been seeing, because I'll give you a kiss on the mouth.